The Comex and London have already lost a lot of their credibility, and because of the way that they do their trade, I would say Comex probably defaults last because London is here's the thing. London is less transparent, but also their trade is a bit simpler in the way that it's done, and it's more of an immediate over-the-counter spot market versus Comex, which is a futures. And Comex has cash settlement and things. But they've been trying to bail each other out. So really, it's not going to be that trade stops on either one. It's going to be that the prices no longer matter. It's going to be a soft default. It's going to be if you stand for delivery and you can't get it, you're going to move your trade elsewhere. And it's not that the gold and silver is going to stop flowing necessarily because everybody can produce it. I think what's going to happen though is that if you want silver and you're anywhere on the right side of the world on a map, you're going to China, India, Dubai, maybe Australia. If you want gold and silver on the left side of the map, you're going to Peru, you're going to Mexico, you're going to the United States. We're going to go to regional markets, and I predicted this years ago, and the prices will be different. And it's okay for that to happen because there's different local supply and demand. Name me anything in your grocery store that's priced on the Shanghai. Or if you're in China, name me anything in China's grocery store that's priced on the Comex. And it is because the commodities which make things are priced there. How in the hell does that happen? If they have their own cows and they have their own silver mines, how come we need a global price for silver? Doesn't local supply and demand matter here? And this is a relic of the dollar, the post-World War II economic system, and the dollar being the dominant currency of the world and having all the commodities priced over there. Now we're going to have regional markets that are priced more regionally, and it's going to be these trade differences, which, by the way, is the way the world's always worked, which is going to cost business opportunities for people to ship stuff around the world. We're just going back to the old system. And yes, Shanghai's going to have immediate credibility. That London and Comex will too. But I think Shanghai's going to. And to get to that second question, is it manipulating Shanghai? Sure. Because what we've also seen in Shanghai this past year, Lucian, is there is more derivative trade on that Shanghai market as a percentage than there was. The amount of physical deliveries coming down on Shanghai. Why? Because they're just doing the same thing the U.S. is doing. So it's not like there's a white knight and a black knight, and there's one better system. China's pulling the playbook from the United States, economically and geopolitically. Now they're doing it slightly differently. So what you're going to have is you're going to have 5 or 6 major trading hubs for all commodities, maybe 7 or 8, maybe there's 2 tiers of them. And when you look at prices on a screen on the ticker on CNBC in the morning, you're going to have China gold price, you're going to have US gold price, you're going to have London gold price, you're going to have Dubai gold price. And they're going to be traders that trade that back and forth. And to facilitate that, the world is still going to have a paper system overlay. And that's the thing that people need to know. It's not all going to be physical. There has to be a paper system overlay because it's going to facilitate the trade of these commodities, gold, silver, oil, hogs, cows, sugar, amongst the world. But yes, China has become and will become a major trading hub. And JP Morgan, which trades all these markets, and some of these other banks are helping them facilitate it, and that's the world that we're going to live in.
Shanghai's precious metals market has expanded rapidly, blending physical deliveries with derivative trading. While some argue this inflates manipulation, it mirrors strategies previously used in U.S. markets. China is effectively borrowing the playbook but adapting it to its own geopolitical and economic strategy. Over time, we may see 5 or 6 major trading hubs for commodities, each with unique pricing. This diversification allows global trade to continue but complicates the picture for investors seeking consistent pricing. A new era of overlapping physical and paper markets is emerging, ensuring trade flows even as traditional systems falter.
The Comex and London have already lost a lot of their credibility, and because of the way that they do their trade, I would say Comex probably defaults last because London is, here's the thing, London is less transparent, but also their trade is a bit simpler in the way that it's done, and it's more of an immediate over-the-counter spot market versus Comex, which is a futures. And Comex has cash settlement and things. But they've been trying to bail each other out. So really, it's not going to be that trade stops on either one. It's going to be that the prices no longer matter. It's going to be a soft default. It's going to be if you stand for delivery and you can't get it, you're going to move your trade elsewhere. And it's not that the gold and silver is going to stop flowing necessarily because everybody can produce it. I think what's going to happen though is that if you want silver and you're anywhere on the right side of the world on a map, you're going to China, India, Dubai, maybe Australia. If you want gold and silver on the left side of the map, you're going to Peru, you're going to Mexico, you're going to the United States. I think it's just going to regionalize more. And I think we're going to have to live with different tiers of prices. And I think that I think what will break on the Comex in London are the pricing schemes. I don't think the markets are going to completely shutter their doors. It's not like a bank's going to go bankrupt. It's going to be more that trade moves, both derivative and physical, and that the United States is going to have to examine their markets and rebuild their markets. And ultimately, what that does, it's not that the gold and silver trade that breaking is what all the stackers want. The stackers want it so they can get their price discovery, and the companies want it so they can get real prices
Yeah.
for what they're mining out of the ground. But it's not that that's the most important thing. It's that this soft collapse, which is going on right now in the Western gold and silver markets, is pointing to the fact that the dollar is dead. And with the U.S. deposing Maduro and going in there and taking Maduro and his wife out and invading Venezuela, the night before we're recording this, what you see happening is it's a dying U.S. empire. It's a dying U.S. dollar system.
Comex in the US and London's markets are showing signs of soft collapse. While the physical flow of metals persists, credibility and trust are eroding. Deliveries may become restricted, and pricing mechanisms could break down without halting trade entirely. The US is likely to intervene heavily to prevent a complete collapse, deploying financial resources to stabilize the dollar and its markets. However, the long-term impact is inevitable. A regionalized market structure with rising prices in the West, reflecting scarcity and constrained supply. Investors must adapt to this new reality of fragmented, tiered commodity markets.
The military interventionism to try to support that dollar is being undercut by the BRICS system of trade and diplomacy. And you're seeing the rise of a new nation state era. And the gold and silver trade is simply an indication of that. It's an indication of the dying dollar post-Bretton Woods, post-World War II system that we've been living in. And when you're stacking metal, that's why you stack the metal. And people want it to occur on the metal. They want the nexus of it to occur on the metals markets. The U.S. government's got a bazooka of money. They'll print $2 trillion before they let the COMEX fully collapse, because the COMEX prices all their commodity. They can't allow it to collapse. That is what people don't understand. You cannot allow the COMEX to collapse because it collapses the dollar in the treasury system. They're going to defend it with a bazooka of U.S. dollars, but it can soft collapse in that you lose credibility in these markets just like you do in the dollar, just like you do in treasuries. And that causes the overall fiat treasury system to ultimately collapse. That's really the collapse that we should be looking forward to. And then we know that that's going to lead us into the CBDC, stablecoin, digital currency era. And that's why China is securing the gold and securing the resources. And they've been doing the Belt and Road Initiative for 20 years. This is why they're doing it, because the end of the US dollar post-Bretton Woods system, the ushering in of the digital system, trade flowing more east, a more even standing between emerging markets and the previous dominant world markets, which started with the fall of the Britain economy and now is starting with the fall of the US economy. And these go over epochs. These are 250 and 1,000 year and 500 and 1,000 year cycles. And you're just seeing the end of the 250 year nation state US cycle, the 500 year cycle of sort of the Western dominance of the world, the Spains, the Britons, in this epic of the re-rise of China after so much time. And all of this happening has huge implications, not just for gold and silver. It has huge implications across, anything that you want to talk about.
Precious metals trading reflects larger geopolitical shifts. The declining US dollar, interventions in Venezuela, and global realignment of trade corridors all signal a shift in economic power. China's Belt and Road Initiative and resource accumulation position it as a dominant player in the East. Meanwhile, Western nations may restrict exports of strategic commodities like silver to maintain industrial and monetary leverage. Gold remains a global reserve asset, while silver's industrial value drives strategic stockpiling. Investors should recognize that metals markets are intertwined with national security, trade policy, and emerging multipolar economic systems.
Oh, it's already happened. And rumors are that China was staying for delivery in the COMEX. I think it's not just China. I think it's a whole bunch of people. I think the sharks are circling around the West. And yes, premiums have spiked, and the Comex and London pricing schemes already broken in real terms because you just got to look at the chart in Shanghai and you can see it. And what it's going to do is, yes, it's going to draw gold and silver east, and I fully expect that's why U.S. made silver a critical mineral, and I think they're going to put their own export restrictions on it at some point. I think, like I said, all the trade's going to go regional, and people want this like hard default, and then they want a repricing of the metals. It's really going to be a soft default and regionalization of prices of metals and other commodities because of this realignment of the geopolitical and the currency systems. That's what's going to happen, and you'll still be able to get gold and silver in the West, but it's going to be restricted. It would not surprise me if the U.S. government bought all of the silver mine output for the next 5 years, and silver got really tight in a physical sense to where if I'm going to my dealer, like, where's my silver? It may be really hard to get. But the U.S. is not going to let all the silver leave the West. There's no way. That's why they're in Venezuela. Venezuela is not just about oil. They're in Venezuela because of the Monroe Doctrine, because they need to protect the western side of the world from a commodities perspective, from a trade perspective. And the U.S. is going to defend that. And if they have to, they're going to go to Peru and Mexico and try to buy a bunch of silver. So it's not over yet. It's not people are looking for like a hard line and a switch. It's not really the way things go. It is, we are defaulting on the Comex right now. We are and have been defaulting on the London market. The way in which that manifests is you're going to get restrictions on metal movement. You're going to get restrictions on deliveries, which we've already had. And you're going to get the U.S. repositioning silver as critical, and they're going to start buying, which they already have, to the tune of $4 billion. And guess what? There's more coming. And we're going to get regionalization of markets. You're going to get different prices. And if you're in one of the Western areas, it's good for you because gold and silver is going to continue to rise in US dollar terms or whatever terms. If we get into digital currencies, it'll rise in digital currency terms. So it's certainly beneficial to people. But all of this rumor going on social media about how there's going to be this hard default and reset of the COMEX and the London OTC markets, I don't see that coming. I see more of a bunch of issues and maybe even some holidays in the trading, but I see the government's quickly reorganizing around that and trying to secure resources. But yes, the net of it all is that China quickly becoming the more credible. China to buy India, Russia, and even South Africa will be in there, and Brazil will be the next of where commodities probably have their most their truest transparency in pricing, and that's going to challenge the West to change their systems. And yes, it will be harder to get in gold and silver here. Prices are going to rise here in dollar terms, and that's just going to continue on.
Silver, unlike gold, has immense industrial importance. Governments will increasingly intervene to secure domestic supply, buying output directly from mines and potentially restricting exports. Mining companies may see unprecedented contracts and subsidies, aligning production with national priorities. Corporations dependent on silver, electronics, healthcare, and technology sectors will lobby governments to ensure supply continuity. This convergence of state intervention and industrial demand will reshape the market, driving prices higher and reinforcing regionalization. Mining equities, particularly in silver and gold, are poised for massive investment inflows, marking the sector as a focal point of global resource strategy over the next decade.
I don't think silver is going to be a key asset for the gold as being that key asset. I see silver being more of an industrial asset. So yeah, the central banks can buy it, but they're not buying it to support the currencies. They're buying it because their governments are like, holy crap, we need silver for industry or our economy is going to collapse. People want to see silver as monetary, and the people still do, and they should, because silver and gold have both been money for 5,000 to 6,000 years. And even in some places, you had more silver or gold depending on where you mined it because you didn't have these big international trade. Now, with the global trade systems, gold is going to be that Basel III, Basel IV high quality liquid asset, and silver is just going to be, you better get it or you're in serious trouble. And I wrote in 2010 for Seeking Alpha that it's possible, it's theoretically possible, given this industrial demand and monetary demand for silver, historical monetary demand, that silver ounce and gold ounce reach parity. Do I think that the exchanges and the governments are ever in any way, shape, or form going to allow that to happen? No, because silver is not just money. Silver is needed for the economy, and they're going to put the brakes on silver, and they're going to restrict silver however they have to. There is a bit of good news in that you can increase mine output. It takes 5 to 7 to 10 years to get all that done. You can fast track it. It still takes a long time. But I see, if you're a mining stock investor, I see billions upon billions of dollars investments coming to primary silver mines in the next few years. And I've also said that, because almost three-quarters of silver, a little bit less than three-quarters of silver, is a byproduct of other mines, copper, lead, zinc, tin, gold, and others, that it is possible that you could see governments take that byproduct supply from a copper mine like Grasberg in Indonesia or whatever the case may be, and they may buy it. They may do a contract. And if the mines are smart, they may say, sure, but subsidize my output of copper because I'm really worried about copper. Like if you're Freeport-McMoRan, you're more worried about copper than silver.
Yeah.
Freeport-McMoRan may say, okay, sure, subsidize my price of copper. You're going to see all sorts of wacky deals going on in mining in the next 5 to 6 years. You're going to see massive mergers and acquisitions. You're going to see massive intervention by the sovereigns on I don't know if we'll get to nationalization of mines. We might. More sooner, I think we're going to get to where the governments buy the silver output directly from the mines, and that they restrict any of that silver from going to a foreign entity like a Samsung or somebody, and further that they subsidize the mine's primary output if it's not silver. And I think you're going to see a lot of that interventionism by sovereigns around the world. And I think the corporates, you look at the $1 trillion in trade of the corporates that depends on silver, then I think you're going to see the corporates lobby these governments. This is another aspect nobody's talking about.
The coming decade will redefine metals markets and commodities investing. Regionalized pricing, government intervention, and multi-hub trading networks will dominate. Physical scarcity, industrial demand, and strategic stockpiling will push silver and gold prices higher. Investors should anticipate rising equities in mining and strategic metals as global realignment accelerates. The West will need to adapt its systems, while the East consolidates influence through China, India, and Dubai. This transformation signals the transition from the post-Baudouin dollar system to a new multipolar economic order, where metals are not only currency alternatives, but critical instruments of geopolitical and industrial power.
Think about in America how many dollars flow through lobbyists to Congress. How long will it take before the Apples and Samsungs of the world that need silver, and I'm just naming a couple, there are medical industry, tons of industries, before the United States S&P 500 goes to Congress and says, we need silver and you can't take it all. And so there's going to be billions of dollars flowing into Congress to strike deals so the industry can get their silver, which is just going to put more pressure on the government to make sure that they're supplying in the supply chain. So the $4 billion deal I talked about with Trump securing silver is a drop in the bucket to what is coming to silver in the Western world. We're going to see much more of that kind of stuff. And I think we'll have formal congressional action, not just executive branch action. We're going to have legislative branch action on the silver market in the next couple of years. In fact, if it took 2 years, I would be shocked. The U.S. government should be doing this right now. Today, they should be holding a special emergency meeting on silver by itself. Okay, to say, how do we forget rare earths, and rare earths are important. We have rare earths in the ground here. We have thorium. We have nuclear energy. Silver, right now, the U.S. government needs to meet to say, how do we supply our silver, get it to industry, get it into our own stockpiles, and keep it regionalized within our friendly trading blocks so that it doesn't get sucked out through Comex. And if you go back to Comex for a minute, as I'm thinking about this in my mind,
Yeah.
I think that you could see the cessation of deliveries of silver and gold on the Comex to any outside entities. And the outside entities don't always come by themselves. They go through the banks. So I think you may see bank disclosure requirements of the big bullion banks of who their customers are, not to us, the public, but to the exchanges, so that the U.S. can restrict the outflow of gold and silver. I would be shocked and dumbfounded if the U.S. government did not enact those in the next couple of years. More so for silver than gold, but for both. And I think you're going to see a wholesale change in not only the regionalization of these markets, you're going to see a wholesale change in how deliveries are made and who can get them. And you're going to see wholesale changes on who's buying mine output. And if you're a mining stock investor in gold and silver, and you've been sitting there going, this is the worst market in 20 years. It's been 3 years of no movement since the pandemic, and another 4 years since 2016, and another 5 years since 2011. And we've never been recognized and valued for our mines and the importance in the world. The silver and gold mining industry may become the epicenter of potentially trillion-dollar investments going forward in terms of securing resources in the next 5, 10 years. And if you're a mining stock investor and you feel unloved, you're about to feel a lot of love in the next 5 years. There's no other way to get it.
That's a good
Particularly with
point.
silver, where it gets blown up in missiles or thrown into landfills, it's recycled less than gold. And so the only other way to get it's out of a mine. Okay. So this is coming. The investment in the mines, it's a lagging indicator, but the investment in the mines is absolutely going to blow up like we have never seen it in our human lifetimes. But one more thing is a really long answer, but since 1974 with the Commodities Act in the US, that's really where the current system started. Because remember, gold and silver used to be money and they used to be pegged. They're not pegged
Yeah.
anymore. They've been trading as commodities, and gold and silver have not caught up to the money printing and the actual physical demand for their product as a commodity, silver specifically. And what's going to happen is when you saw the explosion in 2008, 2011 of the equities complex on gold and silver, a drop in the bucket to what you're going to see over the next 5 to 10 years in the equities market for gold, but specifically for silver, because you're going to have no choice. And the commodities boom that we're going to see around precious metals and the energy sector is going to be ridiculous as the world realigns and we realize we have shortages of some of this stuff. And I really think that's where a lot of money is going to be generated in the next few years.